Hey everyone, welcome to Beach Investing. I'm your host, Andrei Angelkovsky, and today we're going to be talking about taking action. Why do people wait to take action? Why do people wait to invest in real estate? I have clients who really want to invest in real estate. They say to me every day, I really want to invest in real estate, but they always find a reason or an excuse why they just don't invest in real estate. So we're having a conversation and I'm explaining to the client price ranges in this neighborhood go between $450 and $550. And then that person says to me, okay Andre, I want you to find me something, please send me something that's below $400. And I'm thinking, oh wait, maybe they just misunderstood me. I said the price range is between $450 and $550. You just asked me to send you something that's below $400. They're like, yeah, I want a deal. And I'm thinking, oh gosh, here we go again. Like, I don't take these people seriously because they want the deal to come to them. They don't want to work hard. They just want the deal to come to them. And I just don't take them seriously. Every client that I've worked with that has been successful in real estate investing has always bought at market value, and they've added value to the place. They've added a little creativity, a little imagination. They've worked hard, but they've added value. Like they've either created a basement apartment or they've lowered the basement floor. They've converted a single family to a duplex or a triplex. They've added sweat equity. They've added work, and they have all been successful, and they've made a good solid return on their investment. They didn't wait for a deal to come to them. So these people that are always asking us to find them a deal, eventually it's going to have to be, you know what, you're going to have to face reality. There ain't going to be a deal that's going to just come up and show up on your doorstep, and you're going to be like, okay, I'll buy it. Because that type of person, even if a deal showed up in front of them, they still won't buy it. Some of these investors, they just don't have a real true why as to why they are going to invest in real estate. There's like a lack of understanding, a lack of knowledge of the real estate market. They lack confidence and they're just afraid. So what I want to kind of get across is you don't need to buy at market value. You don't need to buy at a great deal in order to do well in real estate. And let me give you a real life example, okay? In the Toronto beaches, a typical house for you buy a house for $500,000, okay? At market value. You put a 20% down payment, which equals $100,000. You have to add land transfer tax to that, so let's just add another $10,000 to make this things simple. Then you gotta add in legal fees, reserve fund, so add another $10,000 to that. And then you gotta create a basement apartment, which will, let's just say, add another $30,000 of renovations. So total, the money that you've added into this project is $150,000 so far. Are you following? Okay. So now, assuming that you've created the basement apartment and you have the upstairs being rented out, in total you're renting up the upstairs for $2,300 and the downstairs for $1,000. Now assume that today's interest rate, guys, you can get a fixed rate for 3.69% as of today's June 24th, okay? And variable rate is actually at 2.25%. which is prime minus 0.75. So you can get a really, really low interest rate, but I'm not going to go that low because we all know that these are all temporary rates, historical lows. So I'm going to use something that's a little bit more realistic, which is 4% fixed rate. So assuming we have an interest rate of 4% on your mortgage, amortized over 30 years, and let's assume that appreciation is 3% per year, even though appreciation in Toronto has been 6% on average per year. So let's just cut that in half at 3%. Assuming you have no cash flow even though that's not the case, but let's assume there's no cash flow. All there is appreciation at 3% per year and your mortgage being paid down every year. Now, you've put in $150,000 into this property already. In 6 years, you will have doubled your money, which means you will have, with mortgage being paid down and 3% appreciation per year, you will have made back your money, basically doubled your money in 6 years. You would have gotten back $150,000. In 6 years, that equals about 16.6% return on your investment per year. Okay? Now, if you added cash flow to that, your return would be a lot higher. But I'm not even going to go that route. I'm just trying to show you that so far, buying at market value and adding some creativity gives you a great solid return. Now, my whole point here is that if you don't need to wait forever like some of these people will do to find that deal. All you have to do is buy at market, add a little creativity, add some work hard at it, and you will do very well in 5 to 10 years. Okay, this is a long-term investment. You do that and you'll do very well. Thanks for listening.